The query runs in 4.3 seconds. Meridian Capital Holdings, LLC. Suspicious activity report filed by First National Bancorp, dated February 14th. $2.3 million moved through 4 accounts in 11 days. The pattern is clean. A shell architecture you recognize immediately. The velocity consistent with layering. The timing offset from a wire originating in Georgetown, Cayman Islands by exactly 72 hours. You've seen this structure before. You've taken it apart before. Your cursor sits over flag for investigation. You close the tab. You've been a special agent with IRS Criminal Investigation for 14 years. You know what this building smells like at 7 in the morning. You know which elevator runs slow. You know which supervisor takes 30 minutes for a 10-minute debrief, and which one reads the room and ends things early. You know the Callaway case the way you know your own handwriting. 47 counts of federal tax fraud, $18.4 million recovered, a 3-year investigation you ran from a shared office with a broken heating unit, and a supervisor who told you quarterly it would never hold. It held. You built that case from a single anomalous deposit pattern, $42,000 that entered a Wyoming LLC on 17 consecutive Fridays at intervals of less than 90 seconds. The kind of pattern a human can't replicate manually. The kind of pattern most agents would have missed. You didn't miss it. The Miami Syndicate case held 2. 4 indictments, 2 plea agreements, 1 wire transfer you traced through 6 countries using a bank deposit method analysis you wrote yourself and later submitted as a training document. That document is in the agency's resource library. Junior agents quote it in their case write-ups. You've sat in the back of 3 training sessions and listened to instructors explain your methodology without knowing you were in the room. You were the logical choice for special agent in charge. You knew it. Your division chief knew it. The case record knew it. Then came Delgado. 3 years of work. A healthcare billing fraud network. $34 million in false Medicare claims routed through 17 provider entities across 4 states, with documentation so clean it had survived 2 routine audits. You built the case from the billing codes up, identified the statistical anomaly in CPT code clusters, subpoenaed the provider entities, mapped the relationships, traced the fund flows backward through 4 layers of corporate structure to a single account in the Cayman Islands, held by a shell registered to a nominee director in Belize. The evidence was airtight. The documentation was complete. You were 6 weeks from a referral to DOJ Tax Division. It collapsed on a warrant application with a date discrepancy. A single field. Incorrectly entered. Not your signature. Your supervisor's. The warrant was invalidated. The evidence chain was compromised. 3 years of work, inadmissible. The debrief needed to end efficiently, and you were in the room, and your name was in the case notes as lead investigator, and the failure needed somewhere to land. It landed on you. Not formally, not in writing, but in every conversation that followed, in every assignment that came after, in every promotion list that circulated and didn't include your name. 6 weeks after the debrief, Torres is in the SAC office, your partner for 6 years. Same grade, same caseload, someone who has borrowed your methodology on 4 separate investigations. Your bank deposit template, your net worth calculation framework, your approach to cryptocurrency tracing. Torres is now your supervisor's supervisor. You receive a commendation letter for the Delgado investigation's preliminary phase. It mentions your diligence. Your father's ring sits next to it in the desk drawer. The ring he gave you the morning you were sworn in, when he drove 4 hours to watch you take the oath. He told you the badge was the credential. The ring was the reminder of why it mattered. You haven't looked at it in 3 months. Here's what the job actually is. IRS Criminal Investigation agents are the only personnel in the entire IRS with full law enforcement authority. Badge, sidearm. Arrest power granted under Title 26 of the United States Code. You are not an auditor. You are not a civil examiner. You are a federal law enforcement officer with the authority to arrest, the authority to seize, and the authority to compel testimony under grand jury subpoena. Your primary tool is FinCEN, the Financial Crimes Enforcement Network, a federal database aggregating suspicious activity reports filed by banks, money service businesses, credit unions, and casinos. Every financial institution in the country is legally required to file a SAR within 30 days of any transaction that meets the threshold for suspicious activity. A teller who sees a customer making multiple cash deposits just under $10,000 files a SAR. A wire transfer with unusual velocity gets a SAR. A new account receiving large incoming wires from multiple foreign jurisdictions gets a SAR. These reports flow into FinCEN continuously. You can query them, flag them, redirect them, or close them. You can see patterns across hundreds of institutions simultaneously. You can trace $1 from a street-level transaction in Miami to an account in Liechtenstein in under 4 hours if the paper trail is there. Currency transaction reports cover every cash movement over $10,000. Mandatory. No exceptions. No notification to the customer. The data exists the moment the transaction clears. Your investigative methodology runs 3 tracks. Net worth analysis reconstructs hidden income from asset accumulation over time. If someone's documented income is $80,000 a year and they own 3 properties, a boat, and a vehicle fleet worth $400,000, the math doesn't work, and the math is your case. Bank deposit method traces unreported revenue through deposit patterns. Every dollar entering a bank account is taxable income until documented otherwise. Expenditures method builds income pictures from spending alone. Credit card records, utility payments, lease agreements, restaurant receipts. You don't need a confession. You don't need cooperation. You need the financial record. You've worked joint operations with DOJ Tax Division, DEA, FBI Financial Crimes, Homeland Security Investigations, and twice with the Treasury Department's Office of Foreign Assets Control. You've executed grand jury subpoenas in 4 jurisdictions. You've seized assets under 18 U.S.C. Section 981. Civil forfeiture. No conviction required. Probable cause sufficient. You know how laundering works because you have taken 4 networks apart from the inside. Shell companies registered in Delaware or Wyoming. A 30-minute online process. No public ownership records required. A $10 registered agent service providing the address. The company exists. It has a bank account. It receives wire transfers. On paper, it's a consulting firm or a holding company or a real estate entity. In practice, it's a conduit, layering through commercial real estate LLCs. Dirty money enters as a development loan from the shell. The LLC uses it to purchase property. The property generates rental income. The income is clean. The original source is 3 entities removed. Each layer adds documentation. Each layer adds time. Each layer adds cost. But each layer adds legitimacy. Cryptocurrency conversion. Bitcoin purchased with clean funds on a regulated exchange, converted to Monero for transaction privacy. Monero's ring signature protocol makes transaction tracing computationally difficult. Cashed out through peer-to-peer exchanges in jurisdictions with limited KYC enforcement requirements. The chain is breakable if you know where to look. Most people don't know where to look. You know every route. You wrote training materials on 3 of them. You've testified before congressional subcommittees on cryptocurrency laundering methodology. You've been quoted in 2 federal court opinions. That knowledge is still yours. The agency didn't take it back when they gave Torres your office. Vasquez contacts you through LinkedIn. a former cooperating witness from the Kellerman case, a forensic accountant who provided testimony on structuring patterns in exchange for deferred prosecution, now running a private firm called Verified Capital Analytics, with a website and 3 employees and a client list that is almost certainly not what it appears to be. The message is 8 sentences. Professional. A former contact reaching out about industry developments. No specifics, no ask, just a connection request and a note. You accept. 3 days later, the follow-up message arrives. You meet at a coffee shop 12 blocks from the federal building on a Thursday at noon. Vasquez is calm, ordered a coffee before you arrived, doesn't look at the door, doesn't check the room, either completely clean or completely experienced. You've interviewed enough cooperating witnesses to know which one this is. Vasquez explains the proposal without raising their voice, without using specific terminology, without saying anything that would hold up in court as an explicit offer. 1 SAR, Meridian Capital Holdings. A 72-hour delay past the 30-day filing window. The statutory grace period exists. The delay would be documentable as a procedural backlog on a high-volume week. The funds clear offshore in the window. The SAR still gets filed. Nothing is destroyed. Nothing is fabricated. Just a delay. You'd receive $9,400 split across 3 transactions to a payment account under a name you provide. Vasquez sketches the routing structure on a paper napkin with a ballpoint pen. You look at it for 4 seconds. The architecture is clean enough to survive a surface review. You know because you run surface reviews. You know what gets flagged and what doesn't. You know which delay justifications the compliance team accepts without follow-up. You know because you helped write the compliance review protocols 4 years ago when the division was restructuring its documentation standards. You say yes. On the walk back to the office, the air feels different, not heavier, just different. Like the temperature shifted 2 degrees and you're the only one who noticed. You tell yourself this is the last time, a one-time adjustment, a correction for something the system owes you. $9,400 against 14 years in the Delgado case, and Torres sitting in the SAC office with your methodology in the agency training library. The father's ring is on your desk when you sit back down. You don't look at it. The $9,400 arrives over 3 days. 3,200, 3,100, 3,100. You move it to a Coinbase account registered to an LLC. You file in Wyoming for $49 from your kitchen table on a Saturday afternoon. You convert to Monero within 6 hours. The conversion technique is lifted directly from the Kellerman case files you still have read access to. You know exactly how it works because you were the one who figured out how to trace it. You know it because you found it. The irony of that doesn't register until 3 weeks later, when it registers completely. 43 days later, Torres stops at your desk and asks how the Meridian file is progressing. Routine check-in, the kind of thing a supervisor does when they're managing a caseload and making sure nothing is stalling. You say it's thin. Probably nothing worth pursuing. Torres nods. Thanks you. Trusts you completely. You watch them walk back to their office and you understand, for the first time with full clarity, that Torres trusting you is now a liability you are actively managing. Vasquez contacts you again 6 weeks later. This time, you're not delaying a filing. You're redirecting a FinCEN query. 3 accounts connected to a Miami real estate LLC called Coastal Meridian Partners are flagged for inclusion in a joint DEA financial review. The accounts are moving $2.1 million across 6 transactions in a pattern that matches the velocity indicators for narcotics proceeds layering. Routing the flag to a different classification removes them from the joint review queue before DEA pulls the dataset. Once the dataset closes, the window for that review cycle is gone. The accounts survive another quarter. The payment is $38,000, structured across 8 transfers over 3 weeks, each transfer positioned below the $10,000 CTR threshold. Structuring. You've prosecuted it twice. The second conviction was on a case you built entirely from CTR gap analysis. You wrote the case summary as a training example. It's still in the agency training library, 2 folders above your Kellerman methodology document. You sit with it for 48 hours. You run the numbers twice. You look at the Torres promotion email in your sent folder, the one you drafted to congratulate them, the one you spent 20 minutes writing so it didn't sound like what it felt like. You tell yourself this is the last time. Then you execute the IRS redirect. Your total received is $47,400. The father's ring is in your desk drawer now, face down. By month 7, you are running 2 operations. Your official caseload, 6 active investigations, 4 in discovery, 1 approaching indictment. The indictment case is strong. You've been working it for 11 months. It will close cleanly, and the record will show another successful prosecution under your name. Your parallel operation has no name, because naming it would require stating what it is. You use your investigative access to monitor and manage exposure for 3 accounts in Vasquez's network, running review cadences, making flagging decisions, reclassifying transactions that would otherwise surface in joint agency pulls. You are not stealing. You are not fabricating. You are making administrative decisions that fall within your discretionary authority. Decisions that any agent could make without triggering a review. Decisions that are individually defensible and collectively catastrophic. $247,000 total, received over 7 months. Distributed across 4 cryptocurrency wallets, 2 Wyoming LLCs, and 1 Monero conversion chain. You documented in a training case study you authored in 2021 on emerging cryptocurrency laundering methodologies. The document is still in the agency training library. Agents in 4 field offices have cited it in their case notes. Torres mentions, "You seem stressed one morning in the elevator." Asks if everything is okay at home. You say you're just tired. A heavy caseload. Torres nods and says to let them know if you need anything redistributed. The offer is genuine. Torres means it completely. You watch them walk to their office, and you understand that the concern Torres just expressed, that human, uncomplicated concern from the person who received everything the system decided you didn't deserve, is the most dangerous thing in your professional life right now. The compliance department runs a pattern analysis on SAR filing intervals across your division. This happens quarterly. It's routine. You've seen the reports for 11 years. You know what they flag and what they don't. You know the tolerance thresholds. You know the statistical baseline for acceptable delay variance across the division's caseload volume. You know all of this, and it doesn't help. 3 Meridian-adjacent filings surface, dated 31, 34, and 38 days after their triggering transactions, all within statutory grace period. None individually flagged, but an analyst in internal compliance runs a correlation query, connecting the 3 filings to a single case file, and generates a low-priority review item. The kind of item that gets assigned to a junior analyst on a slow week. The kind of item that closes without action 80% of the time. You find the flag in the case management system on a Wednesday morning at 8:14 a.m. You know the exact time, because you check the system timestamp 4 times over the next hour. You sit still for 11 minutes after the initial discovery. 11 minutes of complete stillness in a federal office, where stillness looks like focus if nobody's watching you closely. Then you pull every audit trail associated with your credentials over the past 8 months. It takes 4 hours. You find 2 additional potential exposure vectors, neither definitive, both requiring active management. You begin rotating system access credentials on a 7-day cycle. You start leaving your personal phone in your car during work hours. You stop using your work terminal for anything not directly case-related. You print nothing. In the parking garage, you run a surveillance detection route before getting in your car. Check the sightlines. Note the stationary vehicles. Identify any pattern inconsistency in the foot traffic near the entrance. You've taught this protocol to junior agents in 3 different training sessions. You called it basic operational awareness. You told them paranoia was a survival skill when the stakes were high enough. You are running it on yourself in a federal parking garage at 6:15 in the evening because you filed a SAR 4 days late and redirected a FinCEN query and accepted $247,000 in cryptocurrency from a former cooperating witness. In the office, you reposition your workstation so the screen faces the wall. You tell the IRS facilities coordinator. The old angle was causing glare. When Torres enters the bullpen, you locate them in your peripheral vision before returning to your work. You track the movement of everyone with access to your case files. You note who requests file access and when, and cross-reference against the compliance review timeline. You don't know if the compliance review is routine or targeted. You don't know whether Vasquez's network has already been penetrated at a level you can't see. You don't know if there's an open investigation running parallel to yours right now, with an agent somewhere in this building or another building, doing exactly what you did for the last 7 months to the people you were protecting. You are sitting at a desk in a federal building, using the techniques you developed over 14 years to catch people who are doing what you are doing, to avoid being caught by people who were trained by the same agency that trained you, who think exactly the way you think, who will look for exactly what you would look for. The father's ring is somewhere in your desk. You stopped knowing exactly where it was around month 5. Torres is assigned to lead the internal review, not as a suspect, as the most trusted available agent for an impartial examination of the division's SAR compliance patterns. You find out on a Tuesday afternoon when the division-wide email goes out. You read it twice. The assignment makes complete sense. Torres has the highest accuracy rate in the division, a clean record, and no case connection to the files under review. If you were making this assignment, you would have made the same call. Torres sits across from you that afternoon and asks for a walkthrough of the Meridian file. You walk through it. Every detail is technically accurate because you have maintained the legitimate documentation at the standard you've kept for 14 years. That habit, the habit you built, when you believed the credential meant something, when you believed the ring in the desk drawer represented something real, that habit is now functioning as your cover. You are being protected by the person you used to be. Torres asks why the first Meridian SAR showed a 31-day filing interval. You give the documentation justification. High volume week, case priority triage, the interval falls within the grace period. The filing was completed. Torres writes something in the notebook. Nods. Torres asks whether the Coastal Meridian query was categorized before or after the joint DEA review window closed. You give the timeline. The categorization was routine. The timing was coincidental. The documentation supports both statements. Both questions are procedurally correct. Neither catches anything, because you did not leave anything to catch. You built this the way you build cases, with documentation that holds, with justifications that survive review, with the institutional knowledge to know exactly which details matter and which don't. Torres thanks you and closes the notebook. Stands. At the door, Torres pauses and says, "You've always run the cleanest files in the division. That the Meridian documentation is exactly the standard the review should be using as a benchmark for the rest of the caseload." You say, "Thank you." Torres leaves. You look at your desk. The father's ring is no longer on it. You don't remember moving it. You don't remember making the decision to put it somewhere else. It's just gone. The way things go when you stop paying attention to them. The way things go when something else becomes more important than the thing they represent. The review closes 6 weeks later. Inconclusive. The SAR filing intervals held within statutory limits. The Coastal Meridian categorization was documented as a routine classification decision consistent with division protocols. 3 other agents in the division showed similar filing interval patterns during the same quarter, which the review flagged as a systemic documentation issue rather than individual misconduct. The recommendation is for additional training on compliance documentation standards. Your files are clean because you kept them clean. 14 years of clean files, and the habit you built for integrity. The discipline you applied because you believed the credential meant something, because your father drove 4 hours to watch you take an oath. That discipline is the thing that protected the crossing. The person you were made it impossible to catch the person you became. You are still at the same desk, same badge number, same FinCEN access, same credentials, same 14 years. The Meridian file gets reassigned to a newer agent who will approach it without the context you carry, who will look at it with clean eyes and run standard analysis and find nothing, because you have already ensured there is nothing to find. You watch the reassignment populate on your screen. The new agent's name appears in the case management system under the Meridian header. They're 3 years into the job. They submitted a case summary last month that used your bank deposit method framework. You recognize the structure immediately. Vasquez sends a message through the LLC's consulting portal 3 days after the review closes. 1 sentence. No specifics. Just an acknowledgement that the current arrangement is working and an indication that the volume will increase next quarter. You don't respond for 48 hours. Then you respond. 3 weeks later, you find the father's ring in the pocket of a coat you haven't worn since November. You hold it for a moment. You think about the morning you were sworn in, about the drive your father made, about the specific quality of his expression when they read the oath. Not proud exactly, but something more precise than proud. Something that had to do with the difference between the person you were becoming and the person the credential was supposed to guarantee. You put the ring back in the pocket. You hang the coat in the closet. You close the closet door. The system opens a new file on your screen. The query loads in 4.1 seconds. Meridian Coastal Holdings, LLC. Suspicious activity report filed by Pacific Trust Bank. $1.8 million. 3 accounts. 9 days. The pattern is clean. You've seen this structure before. It just needs a new you.